Kerry Stokes' new media and mining conglomerate, Seven Group Holdings, has posted its first set of results. Net profit for the 2 months was $718 million, largely down to the merger in late April. And while some analysts think the group is in good shape, the market isn't so sure. Here's Emily Stewart.
In the battle for ratings supremacy, Channel 7's director David Leckie admits the station has been burnt by the sizzling success of Channel 10's MasterChef.
We're still the number one network. We're still performing right across the suite of programs. Yeah, we got hit a bit by a program on Channel 10, which knocked out a few of our programs. We're coming back like a raging train at the moment, and we intend to catch up on where we were before.
But a number of analysts felt like they'd been left behind due to a communication breakdown during the group's results presentation.
In terms of today's briefing, there were some technical problems that prevented a really close investigation by the analyst community, particularly those of us that were online.
Seven Group Holdings has been trading since the end of April, when Kerry Stokes merged his media and television interests with his equipment and management business, WesTrac. In that time, the group has posted a profit of around $719 million. But most of that is a result of the merger. Strip that out and you're left with a net profit of $28 million. The media group was a star performer, with big earnings in the television network and Yahoo 7, but earnings in magazines were slightly down. And WesTrac was a strong contributor thanks to its presence in China. Distribution of the Caterpillar line is growing, and the group also took a stake in the Agricultural Bank of China to finance local customers. But some analysts aren't sure it'll be a success.
Caterpillar is a premiumly priced product, and there are many comments to the effect that the Chinese are far more price sensitive in their selection of earth-moving equipment and the other product lines.
Despite the good results, there's been a lukewarm reception to the merged group since it listed, with the stock trading well below its opening share price of $7.50.
And there is certainly a negative odour about Kerry Stokes' creeping takeovers, never paying a takeover premium, whether it's Seven Network, West Australian newspapers, the CMJ, the Consolidated Media run that he's having now.
Seven Holding Group says it's worth more.
I'm sad that the market has not yet done the calculations, as it were, as to the relative worth of the company. I think what actually happened is that it was fairly expected there would be a natural rotation of shareholders around about the time the scheme went through. And so to some extent there were some natural sellers at that time.
Analyst Roger Coleman says he thinks the group is a good investment with low debt.
Stokes has grabbed hold of Seven's cash. He's essentially got an ungeared company with net debt around about $300 million, and this is ultra-conservative. Whether there's a worldwide financial holocaust coming, or one for Australia only, or whatever you'd like to call it, he's made himself very low risk.
And he predicts the share price will recover to beyond its opening price within a year.